the underserved population, which had a difficult time in accessing a typical branch network, is who we will look to service, right? And then the youth and the women, where there is high opportunity, and because of cultural reasons also. So we are adding almost 4 to 5 million youth to 18 and above. They're becoming bankable, right? So therefore, as these youth turn 18, just like how geopolitics has changed in different national arenas, you'll see across the globe, these set of youth also have different desires and different tendencies around societal interactions. As the population ages and these 18-year-olds have their first professional jobs by the age of 25 and 31, where they become investable and where they can invest, I think they would rather want to invest in a digital entity versus a bricks and mortar entity. So therefore, digital banks are there to service not only the youth, but also the folks who are underserved and unserved. There's plenty of opportunity within Pakistan. There's more than 9 trillion of cash in rotation already going through. Plenty, if you look at M2 over cash in rotation, it's one of the highest percentages across the globe. So there's no need for us to compete against each other, right? The competition is against digitizing cash, which is expensive, which is prone to risk, right? And is difficult to handle. Digital players can add similar values in different niches, right? For example, the SME sector has very low credit compared to the total credit that is provided to customers across Pakistan. It's less than 6 to 7% of the total credit is extended to SMEs. So I'm sure certain banks can focus on that. In order to gain the trust as a digital entity of the customer, we recognize that there are 2 things which digital banks will need to overcome. The first one is we need to provide superior customer experience, which can replace the human relationship management being provided at the branch network, right? The cup of tea needs to be able to be replaced by the experience on a mobile phone. And it's not easy. So that's the ambition we hold to ourselves. And I think that's plenty of opportunity, I would think, in Pakistan on providing the level of experience at a world-class level. The other area which requires a lot of attention in technology, there are platforms out there on risk and fraud management, right? That is an area, again, which is required by the digital banks to be able to provide superior behavior-based, real-time identification of anomalies, leveraging AI and otherwise, to figure out how we can protect the customers and provide them the luxury that their hard-earned incomes are safe with the financial institution, and that's the basic of fiduciary responsibility. So to gain the trust of the customers, these 2 are going to be the most critical factors for us to overcome as digital banks to be successful. Scams have increased and the sophistication on scams have increased. So it's upon us and the banking industry and overall for the regulator, the policymakers, to provide that financial literacy to our consumers, which is pretty low in the market. And the digital literacy is pretty low in the market. And the scams are increasing. So therefore, investing in technology and AI-driven solutions are going to becoming critical for fraud, and measuring that, right, is going to become critical as a KPI. The retail arena in Pakistan, we need to first have enough folks in the ecosystem and have the tool available, which is a mobile phone with an app, before we start to go into the retail space. Now, with so many consumers in our ecosystem, we think this is the right time to invest in digitizing the retail space, which is highly cash-driven, right? So now with interoperable QR code, we have a very ambitious agenda to also digitize the retail payment space, which is moving in cash around quite a bit. So that is another opportunity and a challenge for all of us to solve. And that payment behavior will drive the deposits. So you cannot purely focus on deposit. That is the banking mindset. You need to figure out what you're going to solve for the customer, which will end up driving the deposit, right? And that's the mindset and the challenge each of the digital banks need to have. You need data in order to lend and lend digitally. And I think there's an opportunity to strengthen our data bureaus. In the Western world, there are very strong implications of a negative report, and everything and anything we do is reported into the data bureau. So therefore, you get a complete holistic picture of a customer, including late utility bill payments, right? Including anything you go out in the market and your behavior is tracked within the likes of FICO score. We have two great data bureaus. I think we need to strengthen and empower them rather than individually trying to create our own scores. It becomes critical for us to not only strengthen the data bureaus in Pakistan with information beyond just the financial services, in arenas wherever they are making payments in utility bills and otherwise, and then driving the behavior based on that, and then rewarding good behavior, and then not rewarding the behavior to have that mindset and culture in the organization that how critical it is to build that behavior. And once you have that data, now AI-based lending is pretty easy. We are doing machine learning-based lending for quite some time. It's highly successful. And AI has made it even easier to enter that space. We take data privacy extremely seriously, right? That is a core component of a right of an individual to decide whether they're going to share data with any other organization or not, right? And the laws need to be very stringent around it, and it's a fiduciary responsibility of an organization to protect customers' data, right? So on one side, you are absolutely right, we need to be able to protect customer data. And in all of our collaborations where we worked with the policymakers and the State Bank of Pakistan, we look at that very seriously. And there are ways to overcome it. You can anonymize, you can hash. Now there's tokenization. So the technology exists. We are working on such initiatives, and such technologies are available for the entire banking industry to tokenize the information, so the information doesn't get, and that's going to protect the customer also. So that's the one side of protecting customer. The other side is, we would of course want to share data across industries, across systems, across platforms, across different lifestyle services, right? The first is within the banking industry. I gave you example of eKYC, shared eKYC initiative. So you have to respect privacy of a customer. Let the customer decide what type of data needs to be shared, and then follow PII rules. So yes, it's an argument where but the bottom line has to be, you have to protect the data of a customer and let customer decide where data should be shared or not shared. And secondly, yes, we need more partners in the ecosystem. If we are unable to fulfill their needs, we're going to find partners to help fulfill their needs, and that's perfectly fine, but with the consent of the customer, with minimal information where PIIs should be protected of the customer. So yes, we need to flourish the ecosystem, but have very strong privacy rules around the customers to protect the data of the customers.